Hey guys, welcome back. Today I wanted to talk about my portfolio in 2021, what's going on in the market right now, and what we can expect from the market in the next year or two. So 2022 is off to a crazy start this year. Bitcoin's down 14%, like 40% from all-time highs. The S&P 500 is down more than 4% from all-time highs. The Nasdaq, the tech sector, is down over 10% now from all-time highs in correction territory. Even gold is down more than 12% from all-time highs. Seems like everything's just selling off and going down. And I'm sure most of you guys have your portfolios that are dropping in value. And before you panic sell everything and try and get out of the market completely, let's look over the last couple years of the market and kind of talk through about what's been happening so far in the last couple years and kind of what we can expect in the next year or two. Over the last couple years, my account's been up quite a bit. So I wanted to talk about that today and kind of look over some of the stuff that's been going on. I'm kind of old-fashioned. I have a notebook way of keeping track of stuff. Sometimes writing things down for me is just a little bit better than trying to put everything in the computer. But over the last 2 years, since before the COVID crash, my account's up more than 3 times. That's all my accounts. Some accounts are up a little more, some are up a little bit less, but that's crazy. And my 2021 returns have been at 60.5% for all my portfolio. Those are crazy numbers. I can't expect that it's going to continue on in the future. So I wanted to talk a little bit about what's been happening in the market, kind of what we can expect to happen, and 3 main ideas to discuss with you guys today. My name's Artem Chuprin. I love talking about money and financing, hoping to get you guys to financial independence alongside with me. About half of you guys watching this have gotten into investing since the March 2020 lows. And the stock market's basically been going up in a just straight to the right line from here. Now, there have been some little dips along the way, but not very many, and they were not significant. This is the first time we're seeing a little bit of increased volatility. A lot of people have made a lot of money in the stock market over the last couple years. Even I myself have multiplied my money by more than 3 times since March of 2020. That's crazy. I'm not that smart, but I got really lucky in this timing. Can this last forever? Is it really that easy to make money in the stock market? Now, to have a better understanding of this, let's think of the stock market as a crazy, angry, bucking bronco. And this bucking bronco does not want to have the whole world sitting on it while it's trying to move up the mountain. This bronco is going to try and throw as many people off and try and kind of upset or screw over as many people as possible. That way it's carrying a lighter load up the mountain. If you think of it this way, the last couple years have just been kind of a straight up with everyone participating, making money. And the market is getting very tired. It has to shake a lot of people out. How is it going to try and confuse you and me? Let's talk about these 3 big ideas that I wanted to discuss today. The first big idea I wanted to talk about in the stock market is easy money. Easy money has happened because Papa Powell has been putting on that printer to work ever since COVID happened. Not only has the printer been working overtime, but there are 2 different ways that the economy has really gotten a huge jumpstart with what's been going on. The large institutions or hedge funds, large corporations on Wall Street have benefited immensely. As the crisis happened, not only have they started printing a lot of money, but they also lowered interest rates to essentially 0. So large companies and corporations were able to borrow huge amounts of money and able to reinvest into themselves. The second way that easy money has really inflated the market is through the average person. So myself and yourself, we got stimulus checks. We got extra bonuses through unemployment. People who weren't working were able to actually bring home sometimes as much, and in some cases more, sitting at home than if they were out working. Those easy money steps were able to inflate the economy. So people in general have gotten an influx of cash into their pockets or into their bank accounts. And most people didn't necessarily invest it right away, but they spent it on large ticket items like cars or services, and a huge way that they really tapped into this money was through home remodels. Home remodels have skyrocketed. People are tapping into their home equities, taking money out, and basically hiring people to work on their homes. Right now, trying to hire somebody to work on my house is almost impossible. All that money that was spent throughout America has a way of circling through the economy and ending up in the stock market. A lot of companies in the stock market themselves have become even more profitable. There's been more and more money made. So not only is the stock price going up, but the stock value themselves has also increased over the last couple years. Now, Papa Powell has had that printer going this whole time from COVID lows until this point. There is going to be a huge change coming. Actually, two things will be happening. So every single month, there's about $120 billion that the Federal Reserve, or the Fed, has been putting into the US economy. And now that money is going to be turned off from the Fed by the end of March. So instead of getting $120 billion every single month into the economy, we're going to be going down to zero money. So the Federal Reserve is really turning down the spigot of money flowing in. The second thing that's going to be happening in 2022 is increased interest rates. So as interest rates start to climb up, the economy is going to have a harder time getting money for their business propositions or for growth in general, meaning easy money is over. The second idea I wanted to talk about today is a mix of inflation and what the Federal Reserve will be doing to try and combat inflation over the next year or two. In a combination with the printer just going full speed ahead, some supply chain disruptions, and also the lack of participation in the labor force, that has created a huge surge in inflation. We're seeing inflation numbers that we haven't seen in the last 40 years, since the early 1980s, 1982 to be exact. That inflation is going to cause changes in the economy. The Federal Reserve is turning off the spigot of extra money being pumped in. They're also going to be increasing interest rates, making it harder for businesses to get money or more expensive to get money. So not only is easy money going to be over, but sometimes the Federal Reserve kind of overcorrects. Every time in history that the Federal Reserve tries to change some stuff in the economy, it usually tends to backfire to some extent. Now, Jerome Powell still has your back, and he still doesn't want the economy to go down. He just wants to cool the inflation down a little bit. But what's going to happen is, here's the roaring fire of the stock market. And his job is to take some water and dump it on the fire, but not putting the fire out, just cooling it down a little bit. Well, if he overcorrects a little bit, but we know for sure that the stock market is going to become more expensive to participate in. There's going to be a higher cost for businesses to make money and to borrow money. Now, most of this information is already priced into the market. A lot of the analysts and hedge fund owners, they understand this a lot better than I do, so they're already calculating this into their risk models. However, there are unknowns that nobody can foresee, maybe a black swan, maybe some other things that can happen that we can't really calculate right now. So if something abnormal comes along, that can derail the economy. So risk always exists, but the stock market always climbs a wall of worry. So as it's moving up, there's always crazy things to think about. So the Cold War, that was a crazy time to be alive. Then we have the crazy oil embargoes, hyperinflation of the 70s. The 80s were scary. In the early 90s, there was so much fear and dread about the economy that financial analysts and stockbrokers were leaving their jobs, buying fishing poles and guns because the whole system was going to collapse and everybody was going to have to live off the land. That was back in the early 90s. What happened since then? One of the craziest bull runs that we've ever seen. The whole 1990s was an explosion for the stock market. So we never know what's going to happen. And the stock market is used to climbing this wall of worry. But there are things happening in the economy right now that can turn down the rate of progress. Now, the last idea I wanted to talk about is psychology of the average stock market investor and kind of just the stock market expectations in general. The last couple years have been insane. My portfolio has gone up a ton, but as of right now, with the market correcting downward, my portfolio is down more than 14% off all-time highs. That's a huge amount. That's more than what I earned in a year. Is it easy to see that much of a loss? In your case, you're seeing some money drop in your account. Are you able to consistently continue investing forward? Right now, a lot of people are asking, is it a good time to sell? Is it a good time to hold? Or is it a good time to buy? By now, if you've seen any of my other videos, you understand that I kind of preach the long-term approach. The best way that you can invest your money is consistently invest no matter what's going on in the stock market. And that means that sometimes your account will not go anywhere for an extended period of time. This might be a year or a year and a half where your money doesn't go anywhere. That means it's going to go down and then back up and down and back up. But that's expected from the stock market. I think if you look at 5 to 10 years out, those numbers start to look a lot better. I think the economy is going to be a lot stronger in the next 5 years. There's a lot of innovation. There's a lot of growth happening right now. There's a lot of new exciting technologies that are going to be coming down the road, and they will continue to revolutionize our lives, making things better, making things more efficient, and giving us a huge profit on the way. We don't know which ones, but continue to invest and expect volatility on the way. So my prediction, I don't have a crystal ball, I don't have any good predictions, but my gut feeling about 2022 or the next couple years is we're not going to be going anywhere crazy with the stock market. I think we're going to see some more volatility in the next short little while. Then the market will kind of meander its way up, and then I think we'll see a decent sized correction probably in the fall of 2022, maybe at the beginning of 2023. But we're definitely going to see some pain in the stock market over the next year. I arm myself with that idea, realizing once it gets painful and a lot of people start to freak out, they start to sell out, that's when I will buy more and more into the stock market. There's a phrase I really like. It's not timing the market that's very important, but time in the market. The main point is consistently invest, you will make money, but it might not be for the next year or maybe next year and a half. Now, the sentiment or the consensus about the stock market itself is very negative for the short term. So whenever everybody agrees on something about the stock market, you can almost guarantee that the stock market will do something that will mess most of those predictions up. So if everybody's expecting a big crash, it probably won't happen. When too many people are on one side, you're gonna have that side be wrong. The stock market's job is to throw off as many people as it can. Personally, this has kind of been a little bit of a difficult time for me, but difficulties help us grow. So as usual, I'm going to show you guys my Roth IRA. Now, the last couple weeks have really seen a huge dip down in the Roth IRA. As of right now, my Roth IRA is sitting at about $95,256. That is a big drop from the peak of over $110,000. But where is it going to be in the next 5 years? I'm expecting a lot bigger numbers than what we're seeing right now. Don't give up hope on the market itself. You're going to see some choppiness and it's going to get a little bit rougher investing, but stick with it, and over the next 5-10 years, you'll see huge results. So hang in there, my friends. Once the sun starts peeking out and there's opportunity growing in the market, I will definitely keep you posted. As always, thank you for watching this video. If you enjoyed it, hit that thumbs up button, share it with a friend. I hope that you stick with it. I hope you don't give up and sell at the worst possible time. And as always, thank you for spending your time with me. I appreciate you guys being here. Take care. Wish you all well. Love you guys. Artie out. Do 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 do.